So I guess the first place is, why do you want to listen to us? There's so much information that is available out there already, but a little bit about who we are, and it'll be really, really brief because I do want to focus on the exciting topic of sales tax. So Steve and I are partners in AIS Solutions. We've been in the business for 20 years. We are a top 50 cloud accountant, a winner of the Global Firm of the Future, which is a contest that's put on by Intuit, who makes QuickBooks, which is an accounting software. We do specialize in the e-commerce space. And as Steve mentioned, we did actually own an e-commerce store ourselves for 8 years. We're also trainer writers in the industry, which means that we are teaching other bookkeepers how to do bookkeeping, whether related to the e-commerce space or even otherwise. So what we're going to cover today, the first thing we're going to talk about, why it matters. Why do you even care? Why do you need to track any of this stuff? Then we're going to talk about sales tax in Canada, sales tax in the US, and as Steve said, we're making sure that there's enough time at the end for Q&A. So as we're going through the slides, and I'm going through the presentation, if you do have questions, drop them in as you think of them, rather than waiting to the end, and then we'll address them at the end. And Steve may also interject as we go through if it's a question looking for some clarity about a particular topic, or something that I'm saying, we'll address it at the time. So Steve, I am relying on you to be able to kind of guide me if I'm not going in the right direction here. Okay, so everyone says bookkeeping is bookkeeping is bookkeeping, and that generally is true, except when it comes to e-commerce bookkeeping. E-commerce bookkeeping is considerably different because it has a completely different set of layers of complexity that you wouldn't necessarily have if you were a retail store with a bricks and mortar location and you're not selling online. Sales tax is just one of the complexities and what makes e-commerce bookkeeping so different, and that's what we're going to cover today. If you had a bricks and mortar retail store, you had a customer who walked in the door, you know what sales tax you're going to charge them. It's going to be whatever province that you're in. But in an e-commerce space, your customers can be all over the world. So are you supposed to charge them sales tax? And if you are, what sales tax do you charge them? And that's what we're going to cover in the next 25 to 30 minutes. So let's start with why it matters. They say that the only thing that is certain in life is death and taxes. In the case of your business, if you're not paying attention to the taxes, it can certainly be the death of your business. So that statement is certainly true in business. So we'll start out with a little bit of stats. So e-commerce is growing extremely fast, and especially with everything that's going on in 2020 with COVID and the ability of so many retailers not to have their doors open. These numbers will be even more different, I think, by the time December rolls around. So these estimates were provided at the end of 2019. This is Canada only. So in Canada, it's expected to be a $55 billion industry in 2020 and expected to be $108 billion. Yes, $108 billion, so almost double by 2023. And just to put it in a little bit of context, over the last couple of months, a lot of the industry stats are that there's about a 30% increase in e-commerce over the last several months from what it was in the year prior. So who knows what it's going to look like by the time December rolls around and we get some stats. They're also anticipating within the industry that the number of audits are going to increase related to the e-commerce industry in 2021. So let's start with Canada, not only because that's where we're located, but also because it's the easiest. It's so much easier than the US. So we're going to start slow, we're going to start easing in, we're going to start with Canada. So in Canada, there's basically 3 sales taxes. 4 if you count QST as a separate. There's GST, which is a federal tax, 5%. HST is a blended federal and provincial tax, and depending on what province you're in, it's anywhere from 13 to 15%. And then PST is a provincial sales tax, or QST if you're in Quebec sales tax, and it ranges anywhere from 6% to 9.975%. Why QST wouldn't just be 10% or 9.5%? Not really sure, but it is 9.975%. So you would think that it would be really easy because there's only 3 or 4 taxes. But in the first example that I talked about, a customer walks into your store, how do you know what tax to charge? And CRA, or Canada Revenue Agency, dictates tax and what taxes you need to charge based on something called place of supply rules. And in its simplest form, this is defined as where the legal delivery of the goods occurs. I'm going to be talking over this presentation about e-commerce stores that actually products. It's the easiest and probably the most simple way to follow as we go through the various place of supply rules and the sales taxes you have to charge. If through your e-commerce store you're offering services or you're selling intangible goods like digital downloads, the rules are a little bit different, significant, but I think for example purposes, products that you talk about. So, and if you think about it, if you had a brick and mortar retail store, had a customer wanting to say you're located in Ontario, like we are, you customer. You probably don't even think about it. It's programmed into your POS machine. It'll automatically calculate it, and you're going to charge the 13% sales tax. Now assume that you are selling e-commerce and your customer is in Ontario. You would still charge the 13% HST because the product is being delivered to someone in Ontario. So that's place of supply. Where is the product being delivered to? If it's being delivered to BC, you wouldn't charge HST. You would charge the taxes that are related to BC. If you're delivering to Alberta, similarly, taxes related to Alberta. So the question becomes, do you have to register? So the answer to this, it depends. Unfortunately, it depends. In most cases, the answer is going to depend on the province that you're shipping to. For GST and HST, is really, really simple. You would charge GST if it's GST province, HST if it's an HST province. Because it's a federal tax, it's really simple to do. You're automatically registered HST if number automatically registered for GST. With PST, every province has its own rules. So let's take BC, for example. BC says you have to register for BC PST if a couple of different things happen. One is if you're soliciting sales in BC. So what does that mean? If you have a website and someone from BC logs on, buys something and shops online, no, you don't. That's not considering soliciting sales. So you don't have to charge PST, you would only charge PST for. But if you were to run a Google ad campaign that targets BC, you now are active soliciting sales in BC, so you should need to register for a BC PST number, collect and remit sales tax. One of the other factors that BC looks at is if you're accepting purchase. Not really sure why that is a distinction, but if you're accepting a purchase order from somebody in BC and you ship out the goods, you need to charge BC PST. That really is a mouthful. And then the last is that BC looks at is location. So if you have a fulfillment house or a warehouse or a physical presence in BC, then yes, you need to register for a PST number in the collect and remit sales tax. And so most of the provinces work on a very similar basis. Again, with BC, it's PST and GST, and most of the provinces are GST, HST. There's basically 4 different provinces that you need to worry about. So BC, Saskatchewan, Manitoba, and Quebec are the 4 provinces that have a separate provincial sales tax. All of the other provinces and territories, it's GST or HST or that are being charged. You do need to be aware of what the HST rates are in the various provinces that have HST, because that is the rate that you need to charge them. So, for example, I'm in Ontario. HST rate is 13%. If I was to ship to Alberta, I would only charge GST of 5%. But if I was shipping to, I think New Brunswick has 15%, I would have to charge the HST rate that applies to that province. And remember, if you have a GST number, you're automatically registered for HST and vice versa. Okay, so now let's dive into the US. Whole different ballgame.
Juliet?
Yes.
Before we head into the US, I just did want to mention one thing. Elena, one of our attendees, just wanted to point out that the Quebec sales tax, how they arrive at that 9.975, is actually 9.5%, which is the QST, times 1.05.
Which is the GST. Okay.
Which gets Perfect. You to the 9.975. So
excellent.
I just want to make sure that was clear to everybody.
Yes, thank you very much. We don't deal with Quebec a lot. And so that's probably why I'm not as familiar with the QST rates, but thank you, Yelena, for sharing that. Excellent. Anything else, or can I jump into the US? Not that I physically want to right now, but.
Well, I mean, we do have a question, and I'm not sure, would you prefer to wait until the end, or?
We can go ahead. We can go ahead. Let's answer the question.
Okay, so the question is, and I apologize if I do not pronounce your name correctly. The name is spelled S-R-E-E, so is that Sri? Hopefully I'm correct on that, but the question is online information service delivered via the intranet treated the same as physical goods delivered via e-commerce for sales tax purposes in Canada and the US?
Great question. And I did kind of allude to that when I said that what we're going to be talking about is we're going to be talking about products, because it is different for intangibles, which is what you're talking about. And it's not as cut and dry. There are, if you search place of supply rules, CRA, it will actually, there's an entire section that talks about intangible goods and how you calculate the taxes. So it unfortunately, it is different. And there are so many variables to the type of intangible good, which is why I didn't want to touch on it. But if you do that Google search, it'll give you a great resource for how and where to charge sales tax. Okay, let's jump to the US now. So I shared some stats for Canada. Let's talk about the stats in the US. 710 billion is the market expected in 2020 for e-commerce. And if we use a similar growth factor as we did on the Canadian side, that would put us at 1.2 trillion, and trillion, by 2023. And if you remember, in Canada, it was 55 billion in 2020. So a huge, huge market in the US. So here is a lovely image of the US and all the various taxes. So let's sit down and start calculating them all. Not, right? Definitely not. So it's intimidating definitely is intimidating. So in the US, there is no federal sales tax. So our GST, which is our federal sales tax, doesn't exist in the US at all. There is no federal equivalent. So each state drives their own sales tax. They choose their own rate, and they collect and track their own taxes and do their individual audits. So there are no federal audits. They're all state-driven. To add to the complexity, you're going to see as well that a lot of the states have local taxes, not just a state tax. So although I've listed only the state taxes on here, there are sometimes local taxes on top of these that will differ. So within a particular state, if you move from one municipality to another, sometimes the local taxes are different. So just adding a completely extra layer of complexity if this one didn't seem like it was enough for you. So the way that the tax is driven in the US is through a term that is used called Nexus. And in its simplest form, Nexus is defined as the relationship that exists between a seller, so you as the e-commerce seller, and the state. And there are certain things that need to happen before it's determined whether you have to register with the state and then remit and collect sales tax. And it used to be that it was primarily driven that if you had a physical location, so you had a warehouse, you had an office in the state, you had to register and you had to collect sales tax, but in the remaining states, you didn't have to. In 2018, there was a decision called the Wayfair decision, which fundamentally changed how e-commerce and sales tax integrate with each other and interact with each other. And most of it, I'm going to say it was primarily because of Amazon, which was kind of shaking up the market in its entirety. But also it was trying to level the playing field, because what a lot of people were doing is they were always buying products out of state so that they didn't have to pay the state tax. So if they went to an e-commerce store that was located within their state, they'd have to pay tax on it. But if they bought something from the state next door, same product, they wouldn't have to pay the tax. So the purpose of the Wayfair decision was to level that playing field. And so they introduced a whole bunch of things that you had to look at as to whether or not you had to charge sales tax or whether you hit Nexus is what the term is that they use. So physical presence is still a big one. If you have actually an office, a warehouse, anything like that, you're considered to have a physical presence in the state. You have to register with the state and collect sales tax. But they've also started introducing things like economic activity. So what is the volume of sales that you're selling into a particular state? If you pass a threshold of the volume of sales, then you need to register in that state. Remote employees. Even if your office is located in California, but you have employees who are located in New York, you actually are considering having Nexus in New York and have to charge tax. Click-through Nexus and affiliate relationships, similar concept. If you have an affiliate who is referring your website to someone within their state, that's considered you have a nexus in that state. Click-through is similar, where they're clicking through a website that's located in a particular state to your store. That generates nexus for you. Similar to what the BC does if you're soliciting sales in a particular state, or advertising, if you're advertising in a state, you're going to generate, or you may generate nexus. If you're storing inventory, again, another way that you'll generate nexus. And the storing inventory one really is quite interesting, especially and very impactful for Amazon sellers. So if you have a physical office in California, or even you have a physical office in Ontario or BC, and you're located in Canada, and all of your inventory is in Canada, but you ship through or you sell through fulfillment by Amazon in the States, wherever your inventory is held in an Amazon warehouse, you're automatically storing inventory there and you're generating nexus. And a lot of people miss that. They think, for example, that I need to be selling $100,000 through Amazon in that state. And that's not true at all. If Amazon is storing your inventory in their warehouse in California, you need to collect sales tax in California. And if any of you are Amazon sellers and you've ever shipped to a fulfillment center in the US, and even in Canada, you'll know that Amazon decides where to ship the product. You don't get to say, I want it to be only in these states. So do be careful with that. And there's so many other parameters, but I've highlighted the main ones. The other one that is a big one, which isn't on this list, is events or trade shows. So if you attend a trade show in California to sell your product, come back to Canada, because you were at a trade show all year in California, you now have Nexus in California. So there really is a ton of different things you have to look at to determine if you have Nexus. So the question is, do you have to register in every state? And again, just like in Canada, the answer, unfortunately, is it depends. But in the US, the difference between the US and Canada is that every state has its own Nexus rules. So I'm going to go through two examples. So the first one, I've talked about California a lot. So California is if you have a physical presence, such as a retail store, a warehouse, or inventory in an Amazon fulfillment center, or you have traveling salespeople who travel through California, then you automatically have Nexus. But if you're out of state, then you have to have $500,000 in sales or a click-through of $10,000 in sales. So one or the other. So lots of different parameters just around California. But if you jump on over to Arkansas, you only need $100,000 in gross revenue or sales before you have to register in that state. So that's a $400,000 swing in sales between California and Arkansas as to when you're considered to have hit Nexus. But Arkansas also charges or forces you to register if you have 200 separate sales transactions. So even if you were selling an item for $1 and you sell 200 of those $1 items, you're nowhere near the $100,000 threshold. But because you have had 200 sales, you're considered to have hit Nexus and you need to register in the state. So now multiply this complexity by 50 states. And I think all of our heads are going to explode. And you would need a full-time person just to register. I guess first to track, you have to track when you hit Nexus. Then you have to register. Then you have to collect the sales tax. Then you have to remit and file sales tax returns. So if we jump back over to Canada for a second, if you're collecting GST and HST across the majority of the provinces and territories, you're remitting and filing a single sales tax return for both GST and HST. The BC and the Manitoba and Saskatchewan PST, you would need to file separate returns, but still there were only 4 of those provinces. So in total, you'd have 5 that you would have to file. In the US, you need to file a separate sales tax return with every single state that you have Nexus in. So how many of you can relate to this? This is probably what you feel like after hearing my explanation. And more than anything else, is it going to be the reason that you don't move into the States and don't sell in the States? It almost makes you not want to sell in the US. But then you remember the size of the market. And because of the size of the market, so many people definitely do want to sell in the US. So there is some good news. There are some tools in the US, and I've listed 3 of the most popular and the most accredited in the US. There's a whole bunch. These are the 3 big ones in the e-commerce space. That they help you navigate. They help you navigate through the complexity of all the different states and the taxes. They track when you're nearing Nexus, when you've approached Nexus, and will help you register, as well as remit and file the sales tax. I will add the caveat that neither of these, or I guess none of these programs are for the faint of heart. It still is quite complex and you still need to have an understanding. The three programs also work very differently depending on what you're trying to integrate it with, what your accounting software is, what you're using to track inventory. So there are some decisions that need to be made about which is the right software as well that you need to connect, but they do actually help simplify. And I'm not sure that a lot of people would be able to navigate through the space without these great tools. So you want to make sure that you have a ninja, someone in your corner that's looking out for you, that's making sure and tracking those sales tax complexities. Whether it's a software, whether it's the bookkeeping firm that you're working with or the bookkeeper that you're working with, you want to make sure that they understand what they're doing to help you get through all of this space. And a thing to note is that government sales tax agencies are not forgiving. With the huge market, as we saw in the US, especially of $700 billion just in 2020, not taking into account the increase that's taken place over the last couple of months, all the sales are cracking down on making sure that, if you're hitting Nexus, that they are collecting the sales tax. The government wants to make sure that it gets its piece of the pie, as you would say. And saying that you didn't know you hit Nexus or that you didn't know you needed to collect sales tax is not a defense at all. And if they've determined that you have hit Nexus and you were supposed to be collecting sales tax 6 months ago, they will take the sales tax that you should have collected straight out of your pocket. So definitely not something you want to trifle with. And so as I said, having someone in your corner, whether it's a bookkeeping firm, a bookkeeper, using those tools that I mentioned that work in the US, there isn't anything similar to that right now in Canada. So you do need to understand what the tax rules and filing the sales tax returns are in Canada. Having someone in your corner is going to let you sleep at night when the tax man comes calling. Okay, how are we doing for time, Steve? I don't even know.
No, we're good. We're good.
Good.
We have some questions when you're ready.
Okay, perfect. So let's open up the questions, and we have put up here as well our contact information if you want to reach out to either Steve or myself afterwards. Our website, aissolutions.ca. On our website, we do have a blog that has a series of e-commerce related articles, so do check out those resources as well. And Steve, I'll let you talk about our podcast since that's your baby, and then we'll jump into the questions.
Sure, absolutely. We launched a podcast several months ago called Smart Man, Smarter Woman. You can find out more information about it at our website there, smartmansmarterwoman.com. And the podcast itself, it is Juliet and I interviewing entrepreneurs from all kinds of different backgrounds. And it is the purpose of the podcast is to share information, knowledge, tips on how to help you as an entrepreneur be more successful, to learn from the mistakes of others. And we talk to people from all around the world. I think last week our guest was in Hawaii, the week before that, Australia. So we are getting input, and we're always looking for gold nuggets that will help you on your own entrepreneurial journey. So hopefully you check out at least one episode that you can find there, and you find some value. And if you do, please subscribe to the podcast.
Perfect. Let's jump into the questions now. Are you going to read out the questions?
Yep. No, one of the questions was, which of those tax tools do we use in our own practice? And is there any particular reason why we use that one?
So TaxJar is probably the one that we use the most frequently for our e-commerce clients. And honestly, it's because it It's probably one of the easier ones to use, and it integrates well with QuickBooks Online. We're a QuickBooks Online firm. But we do also, and again, even though we're in this space daily and living and breathing it, the state's taxes and the rules and the complexities and the regulations for Nexus are honestly changing, daily as this business grows. So we actually also have partnered with a firm in the US that this is all they do. They do tax and Nexus and sales tax filing and returns and registering for e-commerce businesses. And so we've partnered with them, and they're kind of our I don't even know how to phrase this. I guess they're our secret weapon in our back pocket for our clients, because there's no way that we can stay on top of it all. So we've partnered with them, and whenever we sign on a client that's also selling in the US, they automatically become part of that team. But it is TaxJar that we use most frequently.
Okay. And another question: if you didn't collect tax that you should have collected, and perhaps more specifically in the US, although I guess the same could be said here, and I believe you may be able to share a story of one of our own clients without naming names. And what is your liability? I mean, you said, right, that ignorance of the law is not a defense. Can you give an example of what might happen if you neglected to collect the tax and remit it that you were supposed to?
Absolutely. So if you're an Amazon seller, for example, Amazon will track and remit the sales tax for you, but it will not tell you if you hit Nexus. So you actually do need to know that you should be collecting and remitting. So on the Amazon side, it's a little bit easier in the US. In Canada, Amazon doesn't collect or track. I guess it'll collect it for you, but it will not remit it for you, will not track it for you. So if you were a non-Amazon seller, if you're selling through Shopify, for example, and you were supposed to collect the sales tax, some of the states have put in place a voluntary Nexus registration where you say, I was supposed to collect, but I didn't know, or whatever. And if you voluntarily register, they will not come back at you for historical sales that you should have collected sales tax on. All of the states don't do that, but some of them do. If the state finds you and reaches out to you and says, hey, you should have been collecting sales tax, they will go back. And I've seen it as far back as 2 years, that they will go back 2 years and say, hey, you should have been collecting sales tax. What were your sales in this state? Here's the tax you should have collected. Send me a check. In Canada, it's similar to, GST, HST registration. When you hit the 30,000 threshold, you're supposed to collect and register. And if you don't, and they come looking for you, they can pull the GST, HST that you were supposed to collect, and it comes out of your pocket. And in most cases, you're not going to go back to your customer in an e-commerce setting and say, hey, I should have charged you sales tax on that mop that you bought from me 2 months ago, and I forgot, so send it to me now. So it's strictly, it comes right off of your bottom line.
Okay, great.
You want to get ahead of it.
Okay, great. And last question, I don't see any others. The question was, what e-commerce store do we have? We no longer have it. We sold it a few years ago, but we did have an e-commerce business. We were actually selling musical instruments and accessories, printed music books, that kind of stuff. And we had the business for, I guess, almost 8 years, and built it up until it was doing quite well. And then we sold it. So.
And we also did, for a very brief stint, Amazon, where we were resellers and we were doing fulfillment by Amazon. So We do have the experience with, what all the horrendous reports look like in Amazon. And if you don't understand your Amazon reports, we do have a webinar coming up actually going through how to read your Amazon reports and whether Amazon is collecting tax for you, how much it's collecting as well. So we can and Steve, I don't remember the date, but I think it's the first week of September.
Again, if you have any questions, if you'd like to have a no obligation consultation, please send myself or Juliet an email. We'd be happy to chat with you. We do have a lot of experience in helping e-commerce businesses, and we'd be happy to have a chat. So thank you everyone for attending.